Now, earlier today, I spoke to Jackie van Niekerk, CEO at Attacq, the firm that owns the Mall of Africa. They released their interim results for the 6 months ended 31st of December 2022, showing a 47.5% drop in headline earnings, even as revenue dropped 19.5%. I started off by asking Jackie about the operating environment they encountered in this period. Let's listen in.
We've seen record high load shedding schedules over the last 6 months, which has dramatically impacted not just our lives of my staff needing to always provide malls and real estate that's always on and functioning and working, but also the cost of occupancy of our clients has dramatically increased. So for us, it's definitely been I call it a poly crisis, from load shedding crisis to interest rate hikes, inflation costs, political situation with the new cabinet, which I won't comment on anything. So it's been challenging navigating our business.
And in terms of the revenue that did come through, I mean, perhaps we could look at the breakdown of the various segments of your business.
Yeah, so our overall distributable income grew by 27.3%. We're also coming out of COVID, so the recovery has been really remarkable to see. I think also it's testament to a strategy that is paying off and started in COVID disposing of assets, and also now recently announcing the government employment pension fund transaction. I think everything bodes well in re-gearing the balance sheet to stand the test of time. But our distributable income largely driven off Waterfall City portfolio, which is up by almost 50%. One or two once-off wins that we've received, but largely the income from our real estate assets. Our rest of our South African portfolio growing by 38%, and once again driven off rental income and lower finance costs. Again, that's as it's attributable to selling of our assets and paying down our debt.
And how are you viewing costs? Because I did take note of an increase of property expenses of almost 15%. So how are you viewing that going into the next period, and how are you mitigating against that?
Yeah, multiple factors. I said also this morning that one thing that keeps me awake at night is the rising costs. You've got rates and taxes that we don't always control, the escalation. You've got utility costs, which the energy all-in cost for Attacq has grown substantially with the load shedding schedules. So we're putting a lot of precinct resilient measurements in place. That's what we call it. And what does it mean is alternative energy solutions within our portfolio, made up of from retrofitting light fittings all the way to battery backup, solar farms we've invested in, as well as signed a PPA in the Northern Cape to mitigate the energy costs that we get passed on from Eskom, and also the high diesel costs. And I think our strategy, again, being a precinct play or a city developer and not just a standalone real estate a landlord, offers us the opportunity to contract at scale. Security costs, cleaning, all of those costs, we able to bring economy of scale. So I really think we could offer our clients a premium product at a reasonable cost because of the scalability we have within our setup of our portfolio and our strategy.
Now, on the back of that, what I'm quite curious to understand more or hear more about is your development plans. Because on the one hand, I see your action in terms of navigating the load shedding crisis that we currently have in the country. As you mentioned, the solar farms, also the retrofitting lights, etc. Are you building in a different way?
Not to say building construction methods in a different way. But I do think we approach development, and I think potentially a lot of other developers approach it in similar ways. What we do is, we try to get as far as possible, certainty about costs, long lead items. We've seen that glass and tiles get stuck on a ship, and that costs us dearly when we roll out development. So before we roll out the development, it's definitely understanding the long lead items, fixing that out, and understanding the costs that we're in for. And the approach from a development point of view is all about building long-term resilience within our assets. We believe that if you build an asset that is more self-sufficient and resilient, that has got a sufficient backup water, energy efficient, to get you less reliant on the grid, is definitely the real estate of the future. So potentially we would build bricks and mortar the same, but a different methodology that we would take, and a different product will produce at the end of the day.
Now, looking ahead, I mean, the global economic backdrop is still very much unchanged, and in fact, it's worsening. So where do you see the growth coming from?
The subdued growth at this stage. I think South Africa, and we've seen so many great stories come up of South Africa over the years, and we're a resilient bunch of people. The growth is definitely, we're in a lull. How long that will last, I think globally we need to get certainty on what will happen with the Ukrainian war, what's happening with inflation throughout the world. I think a lot of central banks are trying to curb the rising costs and inflation. So for the medium term, I think growth will be definitely lower as what is expected. And for the reason in Attacq, we have built in a mechanism of selling off 30% of Waterfall Investment Company, which is everything here in Waterfall, to the government employment pension fund. We believe we need to transform the company with a healthy capital structure to stand the test of time, buckle down. We've got phenomenal land, and the economy will turn. The medium term potential will slow down, but a long term gain. So I think we've geared ourselves correctly to not build as much out in the medium term, but really have a good capital structure for the future.